Hello everyone and welcome to another edition of the weekly Forex market update. I really hope you have been enjoying these market updates and actually find them beneficial. Okay, today we're going to look at it's Monday morning, May 5th, and we're going to look at the euro. I've been speaking about this triangle for roughly the last couple of weeks. And the euro broke out of the triangle slightly on Thursday of last week. If we go into, we'll see that there was a close above the triangle with this doji. Now, what happened on the non-farm payroll report? The market initially went down and looked like it was going to close inside of the triangle. Let me just take a look at the 60-minute chart. Market came down but found support at the 618 retracement level of this move up and promptly rebounded and again closed above the triangle. So what looked like it's happening is that the market is trying to definitively break out of this triangle, and I believe if we do get a close above 139 or so, then that will be the all clear and will signify we have broken out of the triangle. And I am expecting the euro to hit 140 to 143 if the market confirms a breakout of this triangle. Okay, other market to look at is the British pound. Now, the British pound broke out of its own triangle last week, and it's looked like it's coming back to retest the breakout point. Remember, what happens sometimes is that once we break an area of resistance, which is here, market closed above this area of resistance, and what often happens is that the market may come back and test this area of resistance before heading north. But this British pound trade has been fairly good to us, and we have been in this trade since mid-March, and we definitely have over, I would say, over 320 pips in this trade alone for the British pound. Okay, taking a look at the Japanese yen, we see this market is also in a triangle, and the market currently here on Monday morning is testing this upsloping triangle on the daily chart. As you can see, this triangle is fairly significant, or this uptrend is fairly significant. It has been touched 1, 2, 3, 4, 5, and this will be the 6th time it has been touched. So what we need to see is if this support area holds and the market rebounds further. If the support area breaks, what will confirm a real breakdown in the Japanese yen is if we can close below this 100.50 support area, as denoted by this red line here. If the market closes below this area of support, then we could see a pretty significant decline in the Japanese yen. So with the Japanese yen, the market could go anyway, and we just have to wait and see what exactly is happening. Taking a look at the Australian dollar, the market was in a uptrend. This was a head and shoulder reversal. It's the left shoulder, right shoulder. This is the head. The market broke above the neckline here and reached the 94 level. Now, what happened is that the market found resistance at the roughly between the 618 and the 786 Fibonacci retracement level and is now coming down. Now, what we need to look for is if the market can close below this area of support at 92. See, the market clustered around here and found support here before rebounding. If we do get a close below this area of 92, we could see a pretty significant decline. But the real test is if the market is able to close below this 87 low. If the market closes below 87, then that will reestablish the downtrend in the Australian dollar. So we just have to keep an eye out on Australian dollar. A better way to play the Australian dollar short position is against the Swiss franc. The Swiss franc has been fairly strong in recent times, and it's normally best when you're shorting a currency to short it versus a very strong currency. So the Swiss franc has been relatively strong in recent months, so it makes more sense to short Australian dollar versus the Swiss franc versus as opposed to the US dollar. So what we're really looking for in summary this week is a breakout in the euro, and to see if the market continues to rise in the British pound. That will be our focus this week, and if that happens, then that will really gain us some pretty significant pips for our premium members. If you're ever thinking about, okay, when is the right time to get involved with these signals, these trading signals, when is the right time to start actually seeing profits in your Forex trading account, I would think the opportunity is right now. If you want to learn how to do these trades, or if you don't have time to particularly sit down and trade the market yourself, you can get our premium trading signals that will automatically enter you into these positions. So if you would like some more information, there's a link below this video to see how you can get started. And the best time is always the present. There are many folks who I've spoken to in the last couple of days that said, I wish I got involved 3 months ago or 2 months ago. Well, we have a significant profit now, but I'm sure there are other trades that we are looking to enter, especially in the euro and the British pound, that we're going to be putting on, and now is the time to get involved. So don't sit around and let the market and the profits in the market just pass you by, because others are profiting. Okay, this has been Bayon. I hope you enjoyed this video. Click on the link below the video. Get started. Thank you very much.